What's up, everybody? I know I wouldn't post anything until Monday, but I was paying bills and saw the paycheck hit the pending. It's going to dump in Monday, so this is the first edition of um, where does your paycheck go? And I know nobody gives a damn where my paycheck goes. I get that, but it's a question I ask myself, and I believe you should ask yourself as well. And I have a 3 account system, and the first account is where my paycheck goes. And it's the main reason I went back to work. And there is only one way to build wealth, and you have to have money that you don't need. So even though a lot of people still don't understand fully why I went back to work, this is why. And I got bigger goals and bigger dreams, and I just want to put some fuel on it. So the initial account that my paycheck goes into is a high dividend account, and I recommend to everybody to go out and grab the book by Stephen Bavaria, The Income Factory. And it really turned me on to the idea, at least the possibility, of a different way to approach the market. So if you're going for 10% average returns like the S&P, then you can do it through growth stocks. You can do it through dividend stocks, but you can also do it through high income investments, which will be like CLOs, master limited partnerships, closed end funds, and things like that. So, and a lot of people would think of them as a high risk, which is cool. They probably are. But the understanding is that this is only a base, a flatbed, and then half of the money every month when I get my statement gets pushed into the trading account. Okay. So there's never an opportunity where I'm going to lose everything. It's all leveraged. And then half of the trading account money gets pushed into the investment account and stuff. So you have part of the success of the account helps to build the account and get bigger and bigger every month so that you have more money to move. But it's essentially evenly leveraged between the 3 strategies. So with that being said, we're still going to use the swing trade entries. You could treat this as like an investment account if you wanted to, whereas you just buy the 30 RSI and just go with it, and understand that income accounts especially, but any account, has an inverse yield relationship. So when the price of the stock or equity comes down, the yields go up. Now, if it's like Starbucks or something pays like 1%, it ain't gonna go up that much. But if it already pays 10%, you could see some huge changes. So this is my list down here, and my universe, if you want to call it that. And these are the ones we keep looking at. And we have had the anchor, and then we had the close up here. And even though it's not really something I don't know, I really want to make too public, but we'll go ahead and throw the circles in here too. So as we review them on a bigger term basis, so you'll be able to look back and see, okay, when we're making these purchases, because the whole idea is you want to buy stocks when they're going up. Obviously you had an opportunity here, and then it went back down. You think, well, that would have been dumb. Well, you don't know what the outcome is going to be, right? But had you bought it here on the 30 RSI, you actually got in lower. So have your perspectives in check. Understand that nobody knows where the market will go. But the reason I have my accounts in this order is because this is the guaranteed money. There is no guarantee that a stock or equity will continue to pay out as it has paid out. But for the most part, these are all companies that have been doing it for a very long time. And if you have a pending little D here, so I'll let your little D jokes for the comments there. But if they've already reported it, then if you hold through that, you'll at least get one. So, and if I get one one dividend payment or uh, interest payment or however it is, a distribution. How it depends on what kind of vehicle you buy, right? Uh, well, then I know half of that money will go into the trading account, right? So every bullet that I put into this account, uh, even if that soldier doesn't make it to the end of the war, um, you know, his memory lives on. So through the other accounts. So this is not it. This is a low dividend, but my perspective changed when I went back to work. So um, we're going to see this to an exit point at some point. This is tied to EV a little, so uh, might take a while. And we're just looking for 30 RSI and the close above 10. I'm also a sucker for if it's close to paying off because Valero, we can just go ahead and delete that from the list because these are high dividend payments or distributions or whatever, depending on what instrument you buy. And SCHD is not a super high dividend payer, right? But it's one that a lot of dividend investors use, and I don't want it in any of my other accounts. But I think if the setup is right, uh, you can see more stock gains. Now, where I think the real value of this account will be to show you folks is that on the exits, you actually want to do your opportunity costs. You have to factor in your taxes. Just because a stock goes up a little bit, in a trading account, we just take the money. But in this kind of account where you've already locked in your yield on cost, it may be best to just let it ride. Here's MPW. This one's almost a buy right here. That one's close. I like that one. It might be a day or two. It's a cash account. There's no margin or anything, so it might be a day or two before my funds settle anyway. But look at this, 20% dividend. You think, wait, what? P's and stuff don't typically mean the same thing as like if you're looking at Coca-Cola or Pepsi or something like that. But let's just go through the process how we evaluate some stuff. What I like to do is go through at least the 1 month chart. And what we're doing, you can see it's down, right? But it doesn't go just straight down, right? So it kind of holds its value a little bit. We're in a unique spot. But that's what I'm looking for. I'm looking for something that's semi-stable, and you can see why we're in a pretty good buying zone here. This was support, and you can see last time it hit this zone, it went from $3 all the way to 24. So awesome company. But we'll just see if there's anything that's kind of more readily available. And I don't know if they'll let me trade my money. I just did the deposit. So that's another thing too, is live in a world of abundance. Yeah, this one doesn't have any of the stuff here. My check hasn't even cleared yet, but it's okay because we got the bases covered. So if you're still in a point of survival mode, figure that out. There's only two things you can do. It's not a complicated scenario. They're just the things that you have to do are very uncomfortable. So first, you can lower your expenses, but you can only do that so much. You still got to live. Then you got to find ways to increase your income. It's really quite that simple. ALX here. We've got the 30. Check. I don't know, but we've got a situation where the 5's above the 20. This one's not bad. Oh, with the D. So let's take, wow, $4 dividend. Let's see. Let's take a look and just see what we're dealing with here. Some of these I haven't done. It's a real estate REIT. Okay. 10% yield. Okay. Obviously, when you start looking at REITs, there's a lot of risk right now. And the main risk is with leases and cap rates and things like that. And if you don't know what those are, go look them up. You can find anything you want on the internet. So be curious. But they're really interest rate sensitive, So if interest rates continue to go way up, these things will continue to get clobbered. And this one you can see too, since the dinosaurs. But you can see the volatility is fine or whatever. But it didn't start way up here and just go straight down. And sometimes you can do okay with those investments as well. But when I was 19 years old, I got a stockbroker because I've wanted to be getting out of this poverty stuff for my entire life. It didn't work out like I thought it would, but we've been learning as we go. So, but I bought a corporate bond that paid monthly, so I got a monthly check since I was 19. And eventually, they sent me all my money, and that really confused me at the time. But some of these you have to really look into them a little bit because the goal is not for income forever. Some of these are, there might be a fun. Oh, that's the last freaking one on the list. We might have to go find some more. I don't know, but I like this one. 10%. If we hold the sucker November Friday, we'll lock it in Friday. We won't get paid until the 17th for 2 weeks, but that's fine. Everything looks good, man. I think this is the one. AL. So let's move it up here with our other two positions. And I'm going to do a little rambling on this series, so if you're not into that, then so be it. It's fine. But yeah, that's guaranteed 10%. So if I put my entire paycheck in and immediately get a 10% kick on it, right? Then it doesn't really matter how much you get paid at your job. You just got to have money, a little bit of money that you don't need for bills. That's it. The whole it takes money to make money, there's no truer words ever spoken. And that is that. And we've been downtrending for a while. So what do you think happens to all this REITs and things like that when interest rates start to come down? And I think we're going to have a really good informative discussion there because you'll see these REITs go through the roof. And when it gets to a point where you can get out of real estate REITs and you can use the same money and draw a larger return guaranteed from something else like a closed-end fund or something like that, then that's where this account's just a lot of fun for me. I just do USA because I don't want to deal with foreign tax. That's the only reason. Well, let's take a look, see what we got. So what we were looking for is dividend yield over 10. It's kind of what we're looking for. I don't really care too much about volume, but let's go ahead and go over 500. Yeah, and you got a lot of these are on the list. And like I say, you have to further qualify them. It's Apollo. And you can see there's a Bitcoin ETF, huh? There's all kinds of instruments here. I see this is an oil and gas, right? I love energy. There's your closed-end funds, see? And really let your management or your imagination roll. But most of the stuff is pretty well in a downtrend. And a lot of the stuff that you buy with high income will trend down over time. Without dragging the video out too long, we'll just talk about hypothetical. But if you have a stock that pays you out 15%, or let's look at the one I've got in the account. already. Ochi. Closed end fund, right? Pays a 35% dividend. You're like, wait, do what? Yeah, I know, right? But if the stock goes down 20% a year, you still net 15, right? And there's a lot of really uh, kind of complicated tax intricacies as well. So make sure you understand what you're getting into before you buy anything. And I'm not doing this series to tell you this one I'm buying. You guys should buy this. None of my videos are alert service. It's just to open your mind to things that are possible and how I look at things. Um, but if you buy this and you have a 35% yield, if it goes up 10%, you still get 32% on the next purchase, right? So you would never sell out of this one that's getting 35% and go buy Pepsi that pays 3, right? So hopefully that makes sense. You have to kind of calculate your opportunity costs, and really the ideal is to just get cash flow. So uh, the another thing is too is if the company is good enough to not cannibalize the assets and to basically create the income, pay the management fees because they don't do this for nothing. They still get paid good money, and then keep the price of the equity kind of flat or slowly sloping down. Well, then your dollar cost average strategy really, really, really compounds fast because you have it's more based on the income than it is on the stock price going up. So, like if you have just use Pepsi, it's my favorite stock. So, if you buy that one, the stock price goes up and uh, the dividend yield goes up over time because the company is earning more and more money. Okay, that makes perfect sense, right? Well, the problems with something like that is what if you're in a downswing? Well, they've got a pretty good track record of not cutting the dividend, but a lot of companies do. So, like in recent memory, we had Wells Fargo and a couple of the others that just cut it. You know, Coles did, I think, for a little while. Um, they just cut it. So you have nothing. And the stock price went down, right? So any kind you have a strategy, that's why I don't like growth investing. There's nothing wrong with it. It's just not for me because it's all invested on if the price of the stock goes up. Uh, if it pays any kind of income, well, then you have a little income and you also have the stock price as a bonus as well. So when you have stocks in this account that get the immediate paycheck, boom, then I know I'm going to increase my paycheck because I just got paid on Monday and I'm going to get another check on the 17th. We just saw that, right? So depending on how many shares I buy, um, I'm going to get $4.50 for every share I buy, right? So immediately, 2 weeks, right? So when you have that kind of income compounding, you can start to see how you can really change your financial future quickly. But you know, some people do the income strategy and they do it with varying degrees. So you'll have a lot of like super high payers and then some that are more safe and you know, some people diversify and all that stuff. But um, I like to be as aggressive. I like to see take advantage as the chart shows me. It's the poker player in me. And I can do that with no fear because I know that out of every share for $4.50 I get paid, $2.25 going right in the trading account, right? And that I can be aggressive there as well, no fear. You can see we did 25% in the last 3 weeks selling premium. You know, that stuff is getting good guaranteed income as well. And then when it goes into the investing account, that's 3 strikes, I'm out. That's just hanging out. It does its thing. It doesn't have as high of a growth rate, but it's much safer. And it allows me to buy and hold stocks at awesome times. Uh, Times you'll probably never see, maybe once every 5, 10 years, and never sell them. But also lever them a little bit, so to increase the income. So all of them work together. This is a good intro. I know this series will live on long after I'm dead. So as a first video of the playlist, welcome. You should catch this even years down the road. It's based on concepts, not really on uh, the day. So this will be useful many years into the future. So I hope this is helpful to you and open your eyes like, wow. And I do want to give a word of caution to not try to put everything in the same account. Um, we are human, and your brain cannot handle it. So it gets to a point when you're poor that you don't want to freaking have like uh, a bunch of accounts with really not a lot of money. But just build one of them up first till it's generating, kind of stand on its own two legs, right? Generating a good amount of income, and then start the next one. That's why if you look at the public account, go to that playlist if you're new to stocks. And we started with the government check for $210 a week. And that got us started. And then you'll see if you watch through the videos, after a month or two, we were able to use profits from that account to start the investing account, right? So, and then that kind of feeds itself up. That's probably your best route. I mean, you could start with this account too and do the 3 accounts, either one's, but I just didn't want to overwhelm new folks. So now that I'm back to work and generating an income, this is where it's going. The whole thing is going to go right in here. So remember, you're never supposed to spend your earned income. And people will get triggered by that and say, well, you just work and die. No, you never spend your earned income, because your earned income can create millions. This little piddly check I got from working for 2 weeks, this thing can generate millions of dollars. Okay, so people are like, if you got your passive income thing going on, why work? Because they don't get it, man. They don't understand that this is a little bit of money now, uh, but in the economic cycle we're in, and it's just an incredible opportunity to really grow wealth. And it's going to set me up for the whole rest of my run. So I'm in here getting it, but you don't spend your earned income. And another thing that people mess up is they don't take money out of their investment account. So half of my dividends from an investment account go out of the account. I do put 25% of them back into this one, which I'll probably stop doing now that I have a paycheck. And then we'll just split half into savings or emergency fund, and we'll just go blow the rest. You know, we don't have to worry because it's coming in again the next month, and the month after that, and the month after that. So you can exponentially increase your quality of life and protect your family just by delaying the gratification a little bit. So I hope it makes a lot of sense. I know this was long-winded, but it was cool to kind of get on here and chat. And we first paycheck back to work. This is it. Looks like ALX, and we're going to get we just turned one paycheck into 2 paychecks, right? And what's this pay? Quarterly? August, May, August, November, yeah. Yeah, quarterly. So don't get too drunk up over that. I know people also do, like, they search out the monthly payers, which I do too. But once it's a poor people mindset. So once you get an abundant mindset, you be like, it's all right, because this one may not be set up next time I get paid, right? So I'm going to buy another one, and then another one, and then another one, and another one, and another one. So eventually you're going to have cash on every month. Maybe at first you only get paid every 3 months, but that's okay. You know, it's a-okay. You should look for the best opportunity and not just blindly put your money into some stuff that pays low cash flow, and but it pays every month. You know, this is a good sized dividend, and that's why I made the list. So, and it'll be fun to kind of add more to the list and really see how much opportunity is there. You'll see master limited partnerships and other things slide in here as well. And during every economic time, there is a high income paper asset. So we'll get to discover it together. Regardless, I can't lose my whole paycheck. I'm at least going to get $4.50 a share one time, even if they never pay another one ever again. And if it goes to zero, that's a tax write-off, which is excellent for people with high income. So I hope it all makes sense, and enjoy the rest of your weekend. We'll catch you tomorrow. Peace out.